Hi everyone, I'm Paul and welcome to episode 8 of my vlog on building a trading system. In today's video, I'm going to go into more detail on how I trade the Asian trading range in concert with the London Open. This particular setup doesn't occur that often, but because of its proximity to the London Open, it makes sense to incorporate it into my overall trading plan. The reason why these two sessions go so well together is because they bookend the daily range, and by combining some of ICT's concepts, we can use this to our advantage. So if you're trading the London Open and the Asian trading range, then this is the video for you. But before we go any further, if you enjoyed today's video, make sure you give it a like because that helps other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. These are quick, easy, and most importantly, free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then check out the link in the description where you can sign up for my free weekly newsletter and join our Discord. Now that that's out of the way, let's jump into today's video. So today's video is episode 8 of building a trading system. And I'll just quickly run through the outline of today's video. So firstly, we're going to be talking about some of ICT's concepts. So specifically, we're going to talk about the power of 3. And then during the video, we're going to talk about premium and discount markets and also how we can use the high and the low of the day in London to help outline our trades for that particular session. And the examples that we're specifically going to use for this video is using Bitcoin on the 19th of September. And we're going to take a trade in London and then a trade in Asia. Now, as I said in the opening part of the video, the Asian trading range or the opportunity in the Asian trading range doesn't happen that often, but when it does, it tends to be a nice, pairing to that trade that we may be taking or most likely will be taking in the London Open. So the first concept we're going to cover in today's video is the power of 3. Now, you'll recall from some of our reviews of ICT's mentorship program that we've talked about the power of 3 quite a lot, but we'll go through it again today, and we'll also reference it more specifically to using it with the London Open in terms of how we're going to structure a trade for both the London Open and the Asian trading range. So if you'll recall, with the power of 3, that's accumulation, manipulation, and distribution, and we can use that when we have both a bearish bias and a bullish bias. So if we have a look at the screenshot for today, so if we're looking at a bearish bias, so in this case, we'd be looking at the midnight open New York time. So that would be our opening price. And then what we'd be looking for if we had a bearish bias is for price to go in the opposite direction. So that's that due to swing that ICT will often talk about. So the market will go in the opposite direction, and that's that manipulation that we're looking for. And so what's happening in that particular phase, so between the open and the high, is that's where smart money are going to be accumulating their short positions. So this is where they're getting set, and you often have this occurring around a liquidity pool. So then over the course of the session, the market will trade lower. And then between the close and the low, this is where we'll see smart money distributing those short positions that they took at the beginning of the session. So they're going to be looking at going long, so closing out those short positions between the close and the low. Now, the opposite's obviously true for a bullish bias. So in that example, we'd be looking at the midnight open New York time. So remember, we're always using New York time as our reference point. So we'd be looking at the open at midnight. Because we have a bullish bias, we'd be expecting that manipulation. So we'd be expecting price to come lower. And so this is where smart money is going to be accumulating their long positions. So between the open and the low, again, this would be at, some particular point of interest at a liquidity pool. The market would then trade higher. And then somewhere between the high and the close, that's where smart money is going to be looking at exiting their positions. So they'll be selling those long positions up here. So in terms of how we use the power of 3 with the London Open and the Asian trading range is that we'll often have the high of the day or the low of the day made in London. So for example, if we're trading during the London Open and we see a high printed, so we have the opening price at midnight, we see price go higher, and then the market starts to trade lower over the course of the session, then we can start to build an assumption or a hypothesis that the high of the day is being printed in London, and therefore we can start to expect that we're going to see, lower prices over the course of the session. We're going to see a lower close. And so at some point, and this is where we can use the Asian trading range is we're going to have the low of the day printed somewhere towards the back end of the session, so perhaps even in the Asian trading range itself, and then obviously the close will occur in Asian trading range. So we'd be looking for potentially a long position somewhere between that low of the day and then the close or at the end of the Asian trading range to take that long position. So that's how we can frame the session in terms of we can see where the high or the low is in London, and we'd obviously be taking a long or a short trade depending on how that forms after the midnight open. And then once we've defined we've had either a low or the high of the day in London, we can start to look at the end of the session, past the PM session in New York, or even, as I said, into the Asian trading range to see if the high or the low is printed then, and we'd be obviously looking at then taking a counter trade as we run into the close. Now, hopefully that all made sense. But if it doesn't, don't worry. We're going to go through an example really shortly, and this should hopefully clarify some of the points that I've just made. Jumping over to our chart now, and we're looking at the 18th of September. Now, the trades we're going to be looking at are on the 19th of September, but we're going to start on the daily chart. So we're going to look at that and try and formulate what our bias is and start to, work this forward as we would if we're actually really taking the trade in real time. So we've got Bitcoin here on the 18th, and I've already marked this out so you can see basically where the market's been, and we can start to anticipate where we think it's going to go. So I know a lot of people struggle with their daily bias, and I think I've mentioned in some of my other videos, the thing that I always think about is just where has liquidity been and where is it most likely to go. So that's the concept that I'm going to apply in this particular example, and hopefully that helps you in terms of framing your daily bias as you start to implement that in your trading. So if we look at the way the market's traded here, you can see we've traded lower, we create this bearish fair value gap just here, and you can see as the market trades lower, we take out this sell side liquidity here. So therefore the next draw on liquidity is obviously going to be to the buy side. You can see we trade higher, we go into this bearish fair value gap just here, and you can see the market then reacts to that and reverses and starts to trade lower. So we've taken out the buy side, we're now going to be looking to sell side as the draw of liquidity. And so if I look at the chart, you can see as we painted this swing low here, you can see we created this sell side liquidity. So for my mind, the next draw on liquidity, and you can see we've already got some momentum in our favor, is I'd expect price will start being drawn towards this sell side liquidity down here. So that's my expectation, and let's now start to look down into our lower time frames to start to frame up our trade. So we've zoomed into our 1 hour chart now, and we just need to do some markups before we start going into the session so we can be prepared in terms of where we think price is going to draw to in terms of where those liquidity pools are going to be residing. So you can see this is the Asian trading range. So this is the end of the session on the 18th. And if we have a look, you can see we have a bearish fair value gap, which is formed just here. We'll just quickly mark these out. You can see we've had, this powerful displacement candle here. So we've broken market structure there. You can see we've had another bearish fair value gap form just here. And as I said, this is all happening as we close out this particular day range, and we're coming now into the midnight open, which we then precede the New York open. So if we just click forward one, you can see we got another big displacement down, and you can see this candle actually takes out that sell side liquidity that we marked out on the daily chart. So we've actually already drawn to that point of interest that we marked out on the daily chart even before we've gotten to where our trade setups are going to be. So we've actually met our price target, or price requirement if you want to call that. And if we just zoom back out again and have a look at our daily chart, you can see what this candle's done. So that momentum to the downside definitely continued, and you can see those two big, displacements, or three big displacements that we had downwards just as we came towards the end of the trading range and into the midnight open, have pierced this sell side liquidity, and we've instantly had a reaction to that. So let's go back down into our hourly chart again. Okay, so we're now coming into, this is our midnight open, which is obviously formed at midnight New York time. And now we're going to zoom into our 15-minute chart and start to mark out some more of our levels. And then we're going to go into the London open, and we're going to start to hunt for our setup. So we're on our 15-minute chart now, and we can still see these bearish fair value gaps which have formed on the hourly chart. This is obviously the Asian trading range from the 18th. We've got our midnight open, and this particular candle here, this displacement, you can see we've sliced into that sell side liquidity that we marked out on the daily chart. So we've had that draw on liquidity that we were looking for, and we're expecting to see a reaction. So let's just move the market forward now, and that'll take us to 2 o'clock in the morning, which is the beginning of the London Open. All right, so you can see we've opened now, and let's just start to drill down. So we're going to go down to our 5-minute time frame, and let's just start to step this forward, and we'll start to see if we get a reaction to that sell side liquidity here from the daily and that setup that we're looking for in terms of our fair value gap. So let's have a look at that now. All right, so it's at this point that I'm going to start to drill in tighter and start to look for that fair value gap. So we want to see that sweep of liquidity. We want to see a short-term high broken in terms of a displacement candle, and then obviously a trade back into our fair value gap, and then a run back up towards midnight. So let's start to have a look for that. Right, so we can see we've had another push lower. And we're starting to get a reaction now to that sell side liquidity that we've taken through. So you can see we've had that initial thrust and then another push lower. But after this thrust, we didn't get any particular setup. We're starting to get a reaction now. So you can see we've dipped even further. We took out any remaining sell side liquidity that we had resting under these lows here. And now the market's starting to trade higher. And what we want to see is a breach of these swing highs here and a displacement, which will give us our fair value gap entry. So you can see we've got a gap here. Let's just step forward and see if we get a bit more of a reaction. So you can see we've now definitely breached this short-term high here. And now what we're looking for is a trade back into our fair value gap just here. So you can see we have a bullish fair value gap just here. And what we're going to be looking for is for the market to trade back up into that. And then we're going to look for price to draw back towards that midnight open. So if I mark this out here, this is what it's going to look like. So that's our target. In this example, we're not going to bother about taking partials. We're just going to look for a trade directly to that midnight open level, and we'd have our stop at the low of this candle here. So you'd even have it just a little bit under, but we wouldn't expect now for price to go back down to that level because we've taken out this sell side liquidity on the daily, and we've just re-swept any liquidity that was resting here after we took that initial grab from the daily. So let's just play that forward now and see what happens. Now, generally, for my mind, I like to get out prior to the New York Open, but if I've got a trade that's going in my favor, I will let it run just because I'm quite confident in this particular setup. So we've got exactly what we were hoping to see. We did anticipate that price would take out that sell side liquidity. So we have that set up. And whilst we had a bearish bias initially, we're expecting now the market to travel higher. So we expect that price is going to go up from here because we've already taken the sell side, and the next draw on liquidity should be buy side liquidity. So we'd be expecting a move higher from here. So given that's what I'm looking for, is I have a bullish bias now, so I expect price to go in the opposite direction. I'm seeing price go below that sell side liquidity, so below that midnight open, and now I'm looking for price to trade back up to the midnight open, which is a core part of my trading setup or my trading plan for when I trade the London Open. So let's just keep playing it forward and just see how we go. Now, the thing we want to keep in mind is if we're looking for a trade going into the Asian trading range, I'll just pause this before we obviously got the reaction that we're looking for, is that we'd be anticipating that the low of the day has now been set in London. And so if we're looking to take a trade in the Asian trading range, we'd be expecting a high to be printed somewhere towards the back end of the daily range, so potentially even in the Asian trading range itself, and for us to take advantage of a short trade from that high or from a sweep of liquidity somewhere near the high and then a run lower into the close. So that's starting to formulate the setup. So we've got what we're anticipating will be the low of the day. And one of the things that we can use to confirm our entry here is if we look at, having a premium and a discount market. So now we want to always be taking a long position in a discount, and we want to be taking a short position in a premium market. So if we look at the particular move in this example, so if we look at the origin of the move up here down to where we swept that liquidity, you can see we have our 50% level here, which often coincides with a fair value gap, and you can see our setup has occurred in that discount market. So that's exactly what we want to see. And you can see, even though we've gone through the London Open and we're starting to come into that beginning of the New York Open, we've got price going in our favor. And you can see we hit it just there. So if we pull this across, you can see we've taken out that midnight open price again, and that's given us a 2.15 return, which is, pretty handy. As I said earlier, this is a very reliable setup, but you don't get, really big risk reward trades. They tend to be, around this sort of 2 to 3 mark, but they obviously stack up over time. Now, if we pull back to our 15-minute chart, we've obviously got our first trade of the day out of the way. We've had that draw on the sell side liquidity from the daily taken out. And so now we're looking at the buy side being the next draw on liquidity. So if we draw out to the 15-minute chart now and just zoom back, we can start to see the beginning of that power of 3 starting to occur. So we've had our open here, we've had our manipulation lower, so we've taken out that sell side liquidity, and now the market's starting to trade higher. So we're going to expect the market is going to continue to trade higher. It's just going to be a question of how high does it go. So that first draw on liquidity that we'd be expecting is into this fair value gap here. So this was on the actual hourly chart, but you can see we have a fair value gap on the 15-minute chart, so we have confluence there. We also have another one higher up here, again from the hourly chart, but we also have one sitting inside that as well on the 15-minute chart. So we have some good confluence there, and it's just going to be a matter of tracking price as we go in towards the back end of the session and just starting to see, whether we get a reaction from either of these two zones. So from here, I'm just going to fast forward and get towards the back end of the session so we can start to have a look at if there's a setup for us in the Asian trading range. So we've fast forwarded right to the beginning of the Asian trading range now, and you can see pretty much from what we outlined earlier that we've taken out all of that liquidity as we potentially anticipated. So you can see that run from the open, we actually filled in all of the imbalance here. So we've rebalanced all of that, and you can just see how neatly the market's reacted to that. We rebalanced here, we've come back down, and we've gone into another bullish fair value gap just here. So I'll just mark that out quickly. You can see the market's then reacted to that pool of liquidity and has then continued to trade higher as we've gone into that Asian trading range. And you can see we've traded up into this bearish fair value gap that we formed on the way down from the previous day's trading range. So you'll remember back to earlier in the video, we were talking about our power of 3. And if we specifically think about our bullish example, is that we have that push lower. So we took out the sell side liquidity and the market's now continued to trade higher. So going into the session, we actually had a bearish bias because we're expecting price to draw towards that sell side liquidity. But because that happened so quickly and the market took out that sell side liquidity, we were then looking to the buy side as the next draw. So basically we created this low of the day in London, which suggests we're going to have higher prices and an expansion to the upside over the rest of the session, and that's exactly what we got. Now if we mark our range from the high down to the low, so you can see we have our 50% level here, and that's right in the middle of that bullish fair value gap we just marked out before. And so what we can start to hypothesize is that this was the low of the day, and this is now starting to look like the high of the day. And so what we'd expect from this point is the market to trade lower as we run into the close. And this is where smart money is going to be unloading those long positions that they took down here, somewhere up here. So we've touched into this liquidity pool, based on how the market started to trade. We want to see a reaction to that. If we get that reaction, if we get our fair value gap set up, then we've got, green light to try and take advantage of this power of 3 setup we have on this daily range. Obviously, if we don't get that particular setup, we don't take the trade, and that may be because we just don't get the setup even though we get a reaction from this liquidity pool here, or we just might get a continuation where the market continues higher and then again we just don't get our setup. So either of those possibilities can occur, but we're going to zoom in now and just have a look and see if we get our setup. And they're obviously going to try and take advantage of our stacking of these particular confluences and see if we can get a trade in the Asian trading range to the short side. So we've zoomed into our 5-minute chart now, and you can see that we're trading inside that hourly and 15-minute fair value gap here, and we've had a reaction to that liquidity pool. Now you can see we also have this buy side liquidity relative equal highs over here, which we've obviously taken out, and so there's a decent pool of liquidity here, and we're getting a reaction to that as we'd expect. Now we can see that the market's touched into that, and as we come into this Asian trading range, we're starting to pull back, and we obviously want to see our fair value gap set up before we can start to take a trade. So let's start to zoom in, and we'll start to play it forward and start to see if we get that setup occurring. So you can see we haven't got that on this particular move. So this has been that liquidity that's been taken. We've obviously taken all the buy side residing above these highs here as well, but we haven't really had the kind of displacement that we'd be looking for to enter into a trade. And so we just need to keep drilling in and looking forward as we start to go deeper into that Asian trading range. All right, so now we've finally gotten a little bit more of a reaction. Now, it's a little bit spotty because the volumes in the Asian trading range on Bitcoin can be a little bit thin. So we can see we've had this move higher. We've taken out the buy side liquidity here, and then the market's reacted to that buy side liquidity being taken. And you can see we've just traded down and we've actually gapped lower. So there's actually a bearish fair value gap just there. So if we think about what our 3-candle formation would look like, it's just here, and we'll just mark out this bearish fair value gap. So you can see we've got a lot of confluence in this area now. We have a fair value gap on the hourly, the 15-minute, and now down on the 2-minute, which is our execution time frame. And so what we're looking at is obviously a short position here, and I would be looking at my stop being just there, basically because we've already taken out the liquidity here, and it would be quite unlikely for the market to now trade through that. And then basically what I'd be looking at for a take profit is where's the origin of this particular move. So you can see the origin is probably down here somewhere. And again, in the Asian trading range, because you don't often get a lot of movement, I tend to really look for an easy trade, something that's in and out, and certainly I want to be out before the end of the session, before we start to go into the midnight open and obviously into the London Open shortly thereafter. So when I do take a trade in the Asian trading range, I tend to be, quite satisfied to get a smaller return, so maybe around a 2-hour return, and I want to be out relatively quickly, so definitely before midnight New York time. And so bringing back our concept of the power of 3, we're assuming that this is now the high of the day, and so what we're looking at is taking advantage of a short position to then exit where smart money will be selling, because they've obviously been long from the London Open, and trying to close out that position at or very close to the close. And so if we use our fib again, or our 50% premium discount range, and I said this would be my target down here, so I'm thinking that this is the origin of this move and that's the termination of it. So because I'm going short, I want to be going short in a premium market. So you can see clearly here we've got our 50% level, and our short position, or our entry for our short position, is just here. So that all lines up. We've got our power of 3, so we've got this stacking of concepts, and we've also got a stacking of confluence that gives us high probabilities that this trade is going to be successful. So we've had our break-in market structure here. Let's play it forward and see if we get a profitable trade. So again, the market can be a little bit spotty because of the Asian trading range volumes are pretty low. And you can see we have midnight here, which is where we want to be out before. So we're already in profit. And there you go, we get the reaction that we were looking for. So if we just play this forward, you'll see where the market actually closes. So you can see the end of the day range, if you like, finishes here. So we have our midnight New York time just there. And you can see we've done exactly what we intended to do. We tried to get out, at or before the close and capture as much of that movement between the high and the close as we could. So again, exiting where smart money would be exiting. And in this case, we've pulled in a 3.12 R return, which is pretty handy. I hope you enjoyed episode 8 of my vlog on building a trading system. As I mentioned in the video, the setup on the Asian trading range doesn't happen that often compared to the one that we get in the London Open. But it's a nice addition to the model because both kill zones work together, so it makes sense to take advantage of opportunities if they present in either of those sessions. If you have any questions about this setup or you just like to learn more, then make sure you let me know in the comments. And if you're on a journey to building your own trading system, then I hope that today's video either helped you or gave you some inspiration. If it did, it would be great if you could like it because that will help other people to find it. And if you'd like to see more content like this, then make sure you subscribe to my channel and turn on notifications so that you never miss a video. And finally, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in the description where you can sign up for my free weekly newsletter and join our Discord. Thanks for watching, and I hope to see you next time.